Petty cash funds. So, what is a petty cash fund? Well, a petty cash fund is an amount of cash a business keeps on hand to pay for minor expenditures, and its operation will involve the following three activities: establishing the fund, making payments from the fund, and lastly, replenishing the fund. What are they used for? A petty cash fund is kept so that employees of a business can make small purchases without having to requisition money or use a company credit or debit card, as these transactions require more time and paperwork. So, how much money goes into a petty cash fund? Well, it depends on how often your business makes small purchases. Okay, so let's say that you run out of pens on your desk and you need pens for your work. Rather than presenting this expense to your accountant and waiting for them to allocate the money needed, it would be easier to just grab a few dollars and buy some pens, right? So, this is why we have a petty cash fund. So, what expenses can this petty cash fund be used for? Well, small purchases such as milk, postage, or stationery. But not all employees should have access to these funds. The business should appoint a petty cash custodian to distribute and keep track of the petty cash. Okay, so when journalizing the petty cash fund, first we put in a journal entry to establish the fund. So let's say, for example, that on June 1st, Hilton Shoes puts $200 in order to establish a petty cash fund and gives this money to Paris, the custodian. We would debit petty cash for $200 and credit cash for $200 to establish a $200 petty cash fund. Now, as payments are made from petty cash, no journal entries are made. Journal entries are only recorded when the fund is replenished. So now, at the end of the month, the following expenses have been taken from the petty cash fund: $55 postage expense, $33 supplies expense, and $45 miscellaneous expense. We would journal these as follows. We would debit the expenses and credit cash for $133, the total of the expenses. This shows that the fund needs $133 to be fully replenished. As a result, we would cash a check for $133 to replenish the fund. When a petty cash fund is replenished, the amount of cash needed for replenishment should equal the total amount of receipts. However, this will not always be the case. Sometimes the custodian will not obtain all receipts or will give incorrect change, resulting in a discrepancy between the cash needed for replenishment and the amount of receipts. In such cases, the discrepancy is charged to an account called cash over and short. Cash over and short is a temporary account that can either have a debit or credit balance depending on the situation. So back to the example. Let's say the expenses add up to $133, but the remaining left in the account is $60. That leaves $7 unaccounted for, and therefore we would debit cash short and over for $7 and journal it as follows. So we would debit cash and short over for $7 and credit cash for $140. So there you have it, petty cash funds. Thank you for watching.